Imagine waking up rich and going to bed destitute. I don't mean bad investment, poor. I mean losing your house, your car, and your future before dinner time, poor. On October 29th, 1929, the American dream didn't just fade, it turned into a nightmare. In the span of a few chaotic hours, the world's most powerful financial engine stopped. Rumors flew faster than the ticker tape. Stories of suicides on Wall Street spread like wildfire. Men who owned skyscrapers in the morning were literally begging for a dime on the sidewalk by evening. This wasn't just a stock market crash. It was the funeral of an era and the birth of the Great Depression. But to understand the funeral, we first have to understand the party. The 1920s weren't just good times. They were loud. They were fast. They were electric. World War I was over. Factories were humming. Jazz filled the airwaves, and Model T cars filled the streets. For the first time in history, ordinary people felt like wealth wasn't just for the kings and queens. It was for them. The stock market became a national obsession. Suddenly, it wasn't just bankers in suits. It was waiters, taxi drivers, shoeshine boys. Everyone wanted a piece of the action. You didn't need financial knowledge. You just needed to buy. Why? Because the line on the chart always went up. It seemed like magic. People quit their jobs to trade stocks from their living rooms. Why work for a salary when you can make a year's wages in a single week? But underneath the glitter, there was a dirty secret fueling this magic. A financial drug called buying on margin. Here's how the trap worked. Imagine you have $10, but you want to buy a $100 stock. In the 20s, the broker would say, "No problem. Give me your $10 and I'll lend you the other 90." It sounds great, right? But it was basically gambling with borrowed money. By 1929, nearly 40% of the entire market was fueled by this phantom cash. As long as the market went up, everyone looked like a genius. You could double your money in days. But nobody stopped to ask the terrifying question, what happens if the market goes down? Because if that price drops, the broker doesn't wait. He wants his money back, immediately. And if you don't have it, they sell everything you own. By October 1929, the entire American economy was built on a mountain of debt. And on a cool autumn morning, that mountain began to shake. It started as a whisper, then it became a scream. On Black Thursday, the cracks appeared, but on Black Tuesday, October 29th, the dam finally broke. Panic is contagious. One person sells, then 10, then 1,000. The ticker tape machines, the technology that printed the prices, literally couldn't keep up. They were running hours behind reality. This meant nobody knew the real price. Was your stock worth $100? Or $1? Or $0? Traders were screaming on the floor. Fists were flying. Outside the New York Stock Exchange, a crowd gathered, not to protest, but to watch their fortunes evaporate into thin air. By the end of the day, $30 billion had vanished. That's more money than the U.S. spent fighting World War I. Gone. Charts don't bleed. But people do. The numbers were bad, but the reality on the street was horrific. When the market crashed, it dragged the banks down with it. Why? Because banks had gambled with people's savings. Imagine walking to your bank to withdraw your salary for groceries, only to find the doors locked. You pull the handle. Nothing. A handwritten sign in the window just says, "Closed." Your money is gone. Your life savings erased. Thousands of banks failed. Millions of families lost everything. The Roaring '20s went silent, replaced by the Great Depression. Bread lines stretched for blocks. Proud men who once wore silk suits and worked in corner offices, stood on street corners selling apples for pennies just to eat. The party was officially over, and the hangover would last for a decade. The 1929 crash wasn't an accident. It was the result of greed, cheap money, and too much leverage. It taught us a brutal lesson. Markets don't just climb to the moon. Sometimes they crash back to earth. Says Tonu, Düşündürücü. Look at our economy today. Record high stock markets. Record high debt. Speculation everywhere. Does it look familiar? Mark Twain once said, "History doesn't repeat itself, but it often rhymes." The question isn't if a crash will happen again. The question is, will you be prepared when it does? This is Financial Historica. If you want to understand the cycles of wealth and power so you don't get caught in them, make sure to subscribe. We uncover the stories the textbooks leave out. I'll see you in the next one.